If you make $100,000 a year and still pay taxes, you're playing the game wrong, because legally, some people keep almost all of it. Right now, in 2026, there are people earning six figures who pay less tax than minimum wage workers, not because they're hiding money, not because they're breaking the law, but because they understand something most people don't. The tax system isn't built to be fair. It's built to reward specific behavior, and once you see it, you can't unsee it. But there's one mistake that destroys this entire strategy, and is why most people fail within the first 6 months. Part 1. The game nobody explained to you. There are two versions of the economy. Most people only ever see one. Lane 1, the employee lane. You earn money, you get taxed, you live on what's left. Simple, predictable, and expensive. Lane 2, the owner lane. You earn money, you spend strategically, you get taxed on what's left. Same income, completely different outcome. And this isn't a loophole. This is exactly how the system was designed. Because governments don't reward effort, they reward behavior that grows the economy. Once you understand that, everything starts to make sense. Part 2. Why you're overpaying without realizing it. Let's make this real. Two people, same income, $100,000. Employee pays around $25,000 in taxes, lives on $75K. Owner reclassifies $30,000 to $40,000 as business-related expenses, now taxed on $60K. Same lifestyle, but one person legally reduced their taxable income by tens of thousands. Now here's where people mess this up. They think this means spend more money. No, this is about relabeling what you already spend. Part 3. The write-off lifestyle. This is where the game flips, because many of your normal expenses can become tax deductions if structured correctly. Your phone, internet, laptop, workspace, travel when tied to business. Suddenly, your life isn't just costing you money, it's reducing your tax bill. So instead of earn, tax, spend, you shift to earn, spend, strategically tax the remainder. And this is the moment most people realize they've been playing the game backwards their entire life. Part 4. The shift that unlocks everything. But here's the catch. None of this works without business income. That's the gateway. And no, you don't need to quit your job. Let's say you start something small. Freelancing, content creation, online selling, consulting. Even an extra $500 to $1,000 per month changes everything. Because now, you can justify deductions. You can structure expenses. You can shift how your income is categorized. This is where you stop being just an employee and start becoming an operator. Part 5. The silent weapons almost no one uses properly. Now let's go deeper. Even after deductions, let's say your taxable income drops to $60,000. Still too high, right? This is where advanced players go next. Tax-advantaged accounts. These are tools built into the system to reduce taxes. Used correctly, they lower your taxable income, grow money tax-free, or delay taxes entirely. For example, a business owner can contribute large amounts into a solo retirement account. That alone can drop taxable income significantly. Then comes the most powerful tool, the HSA. This account is different. It has something almost no other account has. Tax deduction when you put money in. No tax while it grows. No tax when used correctly. Now look at what happens. $100,000, $70,000, $50,000, $35,000. You're getting closer and closer to zero. Part 6. The moment everything clicks. Here's where everything connects. Every year, you get something called a standard deduction. Let's say it's around $30,000. If your taxable income is already reduced near that level, your tax bill becomes almost nothing. And with even small credits, can go to zero, or even negative. Climax. Key moment. Let's pause for a second and look at what just happened. You started with $100,000. You didn't hide it. You didn't cheat. You didn't do anything illegal. You simply structured your income, used deductions, leveraged the system, and now, on paper, it looks like you made almost nothing, which means your tax bill disappears. This is the moment everything changes, because now you realize the system was never against you. You just weren't using it correctly. Part 7. The mistake that destroys everything. But here's where people mess it all up. And this part is serious, because this is where people go from smart strategy to financial disaster. It's called co-mingling, mixing personal and business money. It seems harmless at first. You pay for something quickly, you use one account, you tell yourself you'll fix it later. But imagine this, you get audited. They look at your accounts, and everything is mixed together. No separation, no clarity. Now the system says, this isn't a real business. And just like that, everything collapses. All deductions denied. Full taxes owed on $100,000. Interest added. Penalties applied. What started as a smart move turns into a nightmare. Part 8. The firewall, simple but critical. The fix is simple but non-negotiable. You need separation. Separate business bank account. Separate business expenses. Clean, clear records. Think of it like a wall. Once that wall exists, you're protected. Without it, everything is exposed. And this is the difference between people who succeed with this and people who fail fast. Conclusion: this isn't about avoiding taxes. It's about playing the game correctly. Because once you shift how you earn, how you spend, how you structure, everything changes. You stop reacting to the system and start using it. And once you reach that point, you'll never look at money the same way again.